Every market crash seems to come with terrifying headlines. Yet, years later, those same moments often look like incredible buying opportunities. Why do so many intelligent investors let news headlines dictate their decisions? And how can they stop losing money to information that's designed to grab attention rather than build wealth?
That's one of the biggest paradoxes in investing. The media isn't rewarded for making you wealthy, it is rewarded for keeping your attention. Fear captures attention faster than calm, which is why markets plunge spreads much faster than businesses continue growing. Unfortunately, our brains evolved to react instantly to threats, not to evaluate long-term investment opportunities. Think about it. If our ancestors ignored danger, they didn't survive. Today, our brains treat a red stock market screen almost like a predator in the wild. That emotional response pushes investors to act first and think later. Here's the irony. The greatest investors rarely make life-changing decisions because of today's headlines. They make decisions based on business fundamentals, long-term trends, and patience. Look back at history. During the 2008 financial crisis, headlines suggested the financial world was ending. In 2020, many believed the global economy would never recover. Yet, disciplined investors who focused on quality businesses instead of panic often saw remarkable recoveries over the following years. The problem isn't information. It's information overload. We live in a world where financial news arrives every second. Every notification whispers, "Do something." But successful investing often requires the opposite. Sometimes the smartest move is doing nothing. That's where investor psychology becomes everything. Fear convinces you that selling protects you. Greed convinces you that buying at any price guarantees profits. Both emotions push you away from rational thinking. One mental shift changed my perspective forever. Imagine owning a successful supermarket. Would you sell the entire business simply because one newspaper predicted consumers might spend less this month? Probably not. Yet people sell shares in outstanding companies every day because of one frightening headline. Long-term investing is less about predicting tomorrow's news and more about trusting the power of compounding over years. Here's a practical habit. Before reacting to any headline, ask yourself 3 questions. Is this affecting the company's long-term ability to grow? Will this matter 5 years from now? Am I making this decision from evidence or emotion? Those 3 questions create a pause between impulse and action, and that pause can save thousands or even millions over a lifetime of investing. Remember, headlines are temporary. Human psychology is predictable. Wealth is usually built by those who can separate the two. The market transfers money from the impatient to the patient, not because patience is exciting, but because it allows logic to outperform emotion. The investors who consistently succeed aren't the ones consuming the most news. They're the ones who understand when the news simply doesn't deserve a response.
That's a lesson worth remembering. Don't let headlines rent space in your mind or control your portfolio. If you found this conversation valuable, subscribe for more insights into the psychology of investing, and we'll see you in the next episode.